Hello, it is the 19th of May, 2011. I've been having a little bit of difficulties within the mic so far this morning. This is the second time on the recording. It's been a little bit choppy. Hopefully, this will be at least a little bit better. I want to start off with what happened in the morning. This is from 3:02 a.m. London, England time to 3:20 or that of 10:02 p.m. on the 18th in New York and 7:02 p.m. in Los Angeles. Now, the direction for this short-term trend is obviously sideways. Range bound from 35.55 to 35.75, a 20-cent gap from top to bottom, or a little over 0.5%. What's interesting is from this candle to really even here, it felt that it had to find support and resistance on every single minute. And let's look at how this would have traded. Most likely, this market went hop up from the bottom of 35 up to about 73, back down here. Then on this candle, it's tough to say if it went up or down first. It either went up, down, and back up, or it went down, up, and then back down. Big movements in only 60 seconds. This one in here most likely went up first, came back down, and then in here, then another 60 seconds, another move. Now this one here, in 60 seconds, it twice made a 0.5% move. It made a 0.5% move to the downside, and then it made a 0.5% move to the upside. Then the next minute, another 0.5% movement. And then just like in here, same thing. It goes up a 0.5% and then back down a 0.5% in 1 minute. Now, I don't know if this is legitimate or not. This was from forexpros.com. Future Pros has the exact same thing. Let me know if this is correct or not, because I'm not entirely sure, but it is definitely unusual trading. And the entire system, of course, well, it's a little bit fraudulent, as many people know. Now, going on to the short-term chart. I was stating yesterday it got above the 5-day moving average, trying to change the trend from bearish to that of bullish on the intermediate time frame using the 5-day moving average for that of its indicator. Now that trend line's been broke. That doesn't mean much. We can use this trend line now. However, for this to be a confirmed bull market, right now it's an unconfirmed intermediate bull market. What I'd like to see is a support test at the 5, either through price or through time. Through price would mean later on this morning into early afternoon, it comes back down and tests this 5-day moving average. And of course, it would have to be successful and then continue the pattern of higher highs, higher lows, break this resistance, boom, it's now a confirmed uptrend. At least that's the way I view it. Another way is for it to continue trading sideways, and then the 5-day moving average will just ultimately catch up with it, and then at some point burst towards the upside. And then if it just happens to go higher without any support test, then you have to use judgment for how much of a gain do you need for this to be a confirmed uptrend within the 5-day moving average. Now, this doesn't mean all that much because of the declining 50-day moving average. We'll get into that in just a little bit. There is this little head and shoulders pattern possibly brewing. It's really got to break not only the support level here roughly around 35, but even again here this little support level in here. And even again, if it breaks it, it's got to do something about this 5 and the 38.2% from this low to this high. As long as it holds that, then that's still no reason yet for the concern. Breaking higher, the next resistance level is this Fibonacci mark here at around 36 and 3/4. Alrighty, let's now move on to the longer term view on this. And obviously now, like I'm saying, at some point it's going to have to draw another trend line, the one that I was talking about yesterday is looks something in the area of, let me just draw it nicely, this one in here. That's an area that may, in fact, find some level of resistance, but again, it may not. The 50-day moving average is now declining. That means all of these rallies are fairly guilty until proven innocent. I use the word fairly not because it's in a major uptrend, although that's definitely the case. However, it's because it's a newly declining 50-day moving average. If it finds resistance, then the key level of support will be pretty much this former level of resistance, because if the 5-day moving is rising, that means the intermediate term trend will be bullish. All sell-offs will be guilty until proven innocent, and you're battling a situation where all rallies are guilty until proven innocent. Thus, something would have to give. It will be a battle between the 5-day moving average against that of the 50-day moving average. Another level of resistance is the running average from the start of this market crash that is up towards here. It met at this level here in coordination with the 50-day moving average. Final chart will be that of the daily chart. Volume has been very low, and there's been major support test at this Fibonacci line. As long as you stay above this Fibonacci line, then it's bullish. This is neutral, and this is bearish. So for example, when we look back at the previous chart, this is bearish, this is neutral, and this is bullish. And that's why I'm stating with the declining 50-day moving average and within a bear market, if you will, then these rallies are to be guilty until proven innocent. The most likely scenario is that this level will meet up with this level, that will meet up with this level going higher. That doesn't mean that'll be the case, but that's usually what seems to happen, as many points come together at around the same time. It's had a lot of tests of this Fibonacci level, and a breakdown below here could mean very big, fast moves. The so I have 200-day moving average. That's an area of support, as well as this Fibonacci level, just to keep this thing from not going bearish. And are they able to do it? Well, is it possible that the powers that be want to get this silver at the cheapest that they possibly can? If that's the case, it's almost definitely going to go lower because they're the controllers of this fiat market, the paper market. Because if you look at fractional reserve, fraction is a number over a number. So what we'll do is we'll put a 1 here and say, we'll put a Z here. So how let's define Z. 1 equals the amount of silver that things like SLV and the COMEX, the CBOT, the Merck Exchange, all of these different things have for silver that they're either A, can give for delivery, or B, they are backing their asset by. Z represents how much they are actually trading. What would Z be for every 1 ounce of real silver that they have? What would this be? 1 out of 5, 1 out of 10, 1 out of 100, 1 out of 300? Well, the higher the number, the bigger, of course, this collapse is going to be. In the derivative market, when you got, they've been talking about $1 quadrillion, and even if it's a fraction of that, that it's not going to be the most prettiest of collapses. However, the message of the market is stating right now that it can't go on forever, and we'll just have to just wait and see how this message reacts. It's now below this trend line again. Once again, the market's correcting through time doesn't necessarily mean that it has to break down, but because it's had enough test of this level, it's not as volatile as it was before. It can definitely state that it's ready to go lower, but at the same point, I'm not going to give any conviction for the bearish side until it can at least break below the 32 level. The volume is going lower, but overall it's still high when you're having 70-80 million shares, which represents an ounce, 70-80 million ounces. You compare the volume to in here, it's just insane, but the whole paper market is definitely insane also. Thank you for watching and have yourself a magnificent day. Bye-bye.